Hello, trading community. I would like to give you a small presentation on how to break the market down from the weekly time frame and determine a place in which price will bounce and continue in the prevailing trend when the week starts. The aim of this presentation is to share what I know with you because I'm a very new trader. So I want people to see what I'm doing and help me to grow. Because it's only by sharing what you know with others that you correct your mistakes and make progress in whatever you are doing. So let us start. I will use the IFCT methodology to break the market down. So assume that um, assume that today is 13th of September 2019. Assume that this week has not started. Later on in my presentation, as presentations I will have acquired a forex simulator, which is make it possible for me to use specific dates which are before the actual date in which I'm doing the analysis. Okay, so assuming that today is 13th of September, so we have this, and it is Friday at midnight my time. I'm talking from Tanzania. We have this bullish pin bar here. So let us see an order block which is supporting this bullish pin bar. It is this order block. If you open a chart on the weekly time frame, you see this order block. Let me shade it. Let me shade this order block here. This order block. And now I will mark what this order block is based on this bearish candle here. I'll draw two lines which mark the opening, the opening price of this candle, and another line which divides this order block by 2 as follows. So I have two lines here, this one, and I can just populate another one from this one here. So the opening price of this candle is 1.1018. So I change coordinates for this trend line, 1.1018 here. 0.18, yes, there you go. And midpoint, the middle of this order block here is about 1.0934. I change this accordingly. Let me find it again. It's 1.0923, okay. 1.09, 1.0923. There you go. Yes. Okay. I can, having done that, oh no, let me mark this. This is called weekly order block opening price, and this is weekly order block midline. Yes. Okay. So again, I insist that we are here. We don't see this candlestick here. We are here. Today is the 10th of September. Please make that assumption. we go down to the daily time frame. Now, in the daily time frame, we'll not need to go all this far, because I believe right here we'll find other blocks which will be able to help us determine how far price will go down before it resumes the northern movement, because we know for sure that the week this week, having seen this pin bar, we knew for sure that this week would be a bullish week for Euro USD. Let me go down to the daily time frame. Okay, in the daily time frame, what do we see? I have noticed that when we are marking order blocks, we should disregard huge candlesticks like this one. Of course, Michael Huddleston also taught this in his tutorials. These candlesticks, such as this one, which resulted from news, should not distract our vision of order blocks. So in that regard, I have spotted an order block here. Let me mark it. Here. This order block here at the tip. Okay, let me mark it again. Let me zoom this out. Zoom it in. Sorry. So at the tip, because so this is the 10th. This candlestick. This is the 10th of September. We expect price to go down, and it is very unlikely that price will break this area here, which forms our order block here, because the market makers started to buy from this area, from the tip of this candlestick here. Yeah. So this is our order block. This is our daily order block. So we are showing that when the market opens on Monday, price will travel from this pin bar here, will travel for 63 pips, bounce off this order block here, bullish order block, and continue to move upwards. That is the assumption. Okay. Again, let me mark the midpoint of this order block. What is it? It is 1.0990. Let me draw a line to mark that up. That's a bit low. Yes, right there. Yeah. Okay. So again, as I told you earlier, we shouldn't let candlesticks like this one to blur our vision of this order block, because these huge candlesticks are used by market makers to cause panic and confusion in the market. We shouldn't let them blur our vision. Okay. Of course, I know it's easier to say when things have already happened, but that is a fact. Yeah. So so far we know we have determined this as our area. Let us solidify our thinking. This line, what are the coordinates of this line? Let me see. This is 1018, and we know that 1020 is an institutional level. Remember that, what is this line called? This is the weekly order block opening price, and it is the price of this line is 1.1017. Remember, Michael taught us that 20s and 80s are 20s, zeros, 20s, 80s, and 50s are institutional levels. So this line, the opening price of the previous weekly order block, is an institutional level. And again, this line is also an institutional level because this is, remember this line, don't you? This is, no, I've not named it yet. So this line here, let me name it. This is the daily order block midline. See the coordinates of this, it is 1.0999, which is almost 1.1. 1.1 is also an institutional level. So far we have how many confluences? And remember, we are assuming that we are doing this on Friday. So far we have this is in order block, a daily, price is within a weekly order block, and we went down to the daily time frame. We see this order block, which is lying exactly at an institutional level 1.1. So our expectation is that price will bounce off this institutional level because we know that some orders are lying here and go up, and it will go up strongly. That is an assumption. Okay. Let me go down to the 4-hour time frame and see what we can see there. What we may come across. English is difficult. Okay. See how these huge candles, see how market makers are using these huge candles to confuse us? We shouldn't swallow the bait. Okay. In the 4-hour time frame, I think we are confirming that this is a strong zone, it's a strong on the block, but because see this candlestick here, see this candlestick here. See these wicks. And again we have this. So it is giving us more confidence about this being a strong area in which price will reject. Come next week, price will reject from this area and continue moving upwards. And another thing which I really like is that if price comes this far, if I draw my Fibonacci tool, if I use my Fibonacci tool and draw it from this zone, from here up to here, up to this place, this order block will be lying within an optimal trade entry area here. So we have a lot of confluences for putting a pending order in this area. One, we have an order block which is lying inside an institutional level, and it is also lying inside an optimal trading area. Yeah. Okay. So let me go down to the 1-hour time frame to see if we can find anything interesting. Okay, 1-hour time frame. What does it tell me? Okay, 1-hour time frame. Nothing else. Let us see how wide this order block is and determine if we can put a pending order here. Okay, it is only 10 pips wide. So what would I do on Friday of last week? This is what I would do. Of course, I didn't take this trade. I'm still very new to forex trading, as I've told you. So I would simply put a pending order here. I would simply put a pending order here. My entry will be few pips within the order block. I would put my stop loss here, below here, and my take profit will go this far. Because my expectation is that after bouncing from this area, price will come up to here. That would be give me about how many? That would give me about 100 pips, risking only 12 pips. Remember that you have to do this on Friday. Oh no, during the weekend when the market is closed. And you must do this after determining direction of the market based on the weekly time frame, because we know when the week starts, price must retrace before going up. No, we want to know the order blocks, which will be a basis of price retracement during the week. Put a pending order here, 100 pips. To me, that is quite enough for the week. If I took this trade, I might have as well not trade during the week, because 100 pips per week is quite enough, even for an experienced trader. And since this was a very strong setup, well, don't want to talk about risk management. Everyone has their own ways of determining that. But personally, I regard this as a very strong setup. So thank you for watching this video. Please, I'm not teaching anyone. I'm just sharing what I know, because I know by sharing is the only, sharing is the only way that I will continue to develop as a forex trader. I know there are so many other forex traders who are very experienced as compared to me. I would like to see, I'm kindly asking you to watch this tutorial, small tutorial. Please spare time. I know you are busy. Please spare a few moments to watch this tutorial, and please give me your comments in the comment section below. I'll appreciate your comments, because I'm not, as I said earlier, I'm not teaching you, but I'm just, I'm inviting, I want you people to ask me questions and teach me, because I want to learn from the giants instead of just keeping what I know to myself. Well, maybe by posting this, other new traders will also learn from me. So as we see, this was a very, very good trade. When the week opened, it was a very good trade. Things to notice that you should be very careful when setting profit targets, because you may end up making nothing out of a very good setup. So with those few remarks, I thank you again and hope to talk to you again in another video, because I will continue to share. Thank you. Stay blessed. Trade safely. Stick to your trading plans. And after you have determined a good entry, a strong setup, trade confidently, because it's only by trading that you'll make money. God bless you.